Well, on that same topic, I just read that what was it last night or yeah last night at or excuse me Tuesday night the longshoremen on the east and the Gulf Coast have gone on strike, and they were saying, this could affect our economy by $5 billion a day. Do things like that factor into what we're talking about here today?
Well, sure, it definitely could. Now, again, it's going to be it's going to take some time to really see how that squirts out because that could be very that can be very bad for the economy in terms of diminishing activity, which again, a more depressed economy generally is good for mortgage rates and for bond yields. Now, in this case, it's going to be more of a mixed bag because to the extent that the economic data points come out after this strike has started, things like the labor numbers,
Mm.
it's going to take a little bit more analysis to look at those labor numbers. Let's say the unemployment rate's up, or manufacturing and services activities starts to drop. Well, you've got to peel the onion on that and take into account, well, to what extent is this strike, which is going to significantly impact the economy nationwide, what influence does that have? And of course, if it's significant, it could be looked at as something that is relatively temporary, and therefore the markets may not react as poorly as you otherwise would think. So it can get kind of complicated in terms of the analysis. So we'll see how that goes. I'm a little surprised that there's not a little bit more focus at a federal level to try to get this strike situation resolved sooner than later. They seem to be taking more of a hands-off approach, and I'm kind of surprised by that.